Serba Dinamik's board has decided to take legal action against its external auditor KPMG, which has shone the limelight on the oil and gas outfit for the wrong reasons after it raised red flags on its clients' financial accounts. Serba Dinamik is alleging that KPMG had been negligent and breached its contractual and statutory duties to the group. Its legal consultant, Tan Sri Muhammad Shafi Abdullah, told a media briefing today that the suit was filed today and a copy of the writ has been served on the auditor. He argued that KPMG had raised the red flags in an inappropriate manner, saying that the audit firm should have met with its client to clarify the issues. Meanwhile, the company's newly appointed chairman, Datuk Muhammad Ilyas Pakir Muhammad, claimed that KPMG has blown the audit issues out of proportion. According to him, the issues raised by KPMG are not related to the company's revenue or its bottom line, and insisted that Serba Dinamik is a healthy company. He also said that KPMG's red flagging has tarnished the group's corporate image, highlighting the fact its market capitalization has lost over 3 billion ringgit since news of these audit issues first broke. Meanwhile, Serba Dinamik founder and group CEO Datuk Dr. Muhammad Abdul Karim Abdullah maintains that the management has done nothing wrong. Shares of Serba Dinamik closed 4.2% higher at 62 sen, valuing the group at 2.32 billion ringgit. Italy's largest insurer, Generali, is proposing to buy a 70% stake in AXA Affin Life Insurance, a 53% stake in AXA Affin General Insurance, as well as enlarge its current stake in MPI Generali Insurance from 49% currently to 100%. In a statement, Generali said it will acquire a 49% stake currently held by France's AXA and a 21% stake currently held by Affin Bank in AXA Affin Life Insurance, and a 49.99% stake in AXA Affin General Insurance from AXA, and a further 3% stake from Affin and minority shareholders. Generali also plans to buy its joint venture partner Multipurpose Capital Holdings out of MPI Generali Insurance. The total consideration for the combined transactions is 1.29 billion ringgit, subject to closing adjustments. As a result of the deals, Generali will operate in Malaysia through two companies, one in the property and casualty segment and the other in the life segment. In the property and casualty segment, Generali said, both AXA Affin General Insurance and MPI Generali will be merged following the transactions, creating one of Malaysia's leading general insurance operations, with Generali holding a 70% stake and Affin the remaining 30%. Generali will also ink an exclusive bancassurance agreement with Affin for the sale of conventional property and casualty and life insurance products. The transactions are expected to be concluded in the second quarter of next year. Astro Malaysia Holdings says first quarter FY22 earnings jumped 91% year-on-year to 141.25 million ringgit as content costs and net financing cost declined. Quarterly revenue increased by around 0.8% to 1.06 billion ringgit from 1.05 billion in the first quarter of FY21. This was attributable to higher advertising revenue, merchandise sales and others, offset by a decrease in subscription revenue. Earnings per share rose to 2.71 sen from 1.42 sen previously. The group declared a dividend of 1.5 sen for FY22. On its outlook, Astro said the operating environment remains challenging amid nationwide lockdowns, even as Malaysia rolls out its vaccination program. It noted that prolonged lockdowns may impact revenue, in particular advertising and enterprise revenue. It noted that it will continue to optimize cost and actively manage its capital to further strengthen its balance sheet. Shares in Astro closed 5.9% higher at 1 ringgit 25 for a market value of 6.52 billion ringgit. British American Tobacco Malaysia, or BAT, has decided to withdraw the judicial review it filed against the Health Ministry following a mutual settlement. In a filing with the bourse, it said there is no material financial impact on the company and its subsidiaries due to the withdrawal of the application. There is also no liability imposed on the group. In October 2019, the Health Ministry overturned its approval granted previously for the tobacco giant to sell its mini cigar, the Dunhill HGL Cigarillo, as a non-cigarette tobacco product. It said in a letter sent to BAT subsidiary, commercial marketers and distributors that upon analysis of the cigarillo, it found that the product falls within the definition of a cigarette under Malaysian laws and that it will be required to comply with the restrictions applicable to cigarettes. BAT criticised the unexpected U-turn decision, claiming it highlights the challenging and unreasonable parameters imposed on a legal tobacco company to operate in Malaysia. It filed the application for a judicial review in November 2019. At the end of trading, BAT's shares were up 1.25% at 14 ringgit 60 sen for a market capitalisation of 4.17 billion ringgit. Daya Maju Ltat, the company involved in the Klang Valley Double Tracking Project 2 dispute, has been given an extension of its ad interim injunction against the Malaysian government, Transport Minister Datuk Sri Wee Ka Siong and Keretapi Tanah Melayu until July 26th, when the hearing of its appeal is scheduled. A 3-member Court of Appeal bench, led by Justice Datuk Wira Kamaluddin Muhammad Said, allowed the extension of the injunction, also known as an Arrinford injunction, which was due to expire this Thursday. The extension was granted after Azliza Ali, Senior Federal Counsel for the Malaysian government, and we had no objections to the extension. The company had named the Malaysian government, we, KTM and Opus Consultants Malaysia as defendants in this suit in a bid to stop the government from taking over the project and appointing new contractors. According to we, a study done by Opus Consultants found that the project could be constructed at a lower cost. Daya Maju Ltat also filed a judicial review against the government to stop the retendering process pending the disposal of the present suit.